the start?
James, we know that Spotless has debuted on our market today. It was up 9% to around $1.75 when it did come on. We know the IPO price was $1.60. It's trading just below that at the moment, so still up about 7%. We know it's the biggest IPO to hit our market this year. They were involved with the equity raising of about $1 billion. So we were fairly optimistic on this stock coming into the IPO today for a few main reasons. Firstly, we know it was around 7 times oversubscribed, so there was some significant interest in the stock. Secondly, looking at that IPO price of around $1.60, it was at the lower end of the guidance range that the company did provide, so it did look like a fairly attractive IPO price. We also know that it's not going to probably fall below that $1.60 level as a result of UBS's involvement, so there probably is a bit of protection on the downside risk there. But thirdly, we also know that it's trading on around a 12 times forward price to earnings ratio. So a few of those reasons we were remaining fairly optimistic on it. However, it probably has been a little underwhelming in our view. We were probably expecting it to be performing a little more strongly today, and that's really as a result of looking at some of those other recent IPOs we've seen on our market. It does seem to be underperforming some of them quite a lot. If we have a look at firstly Beacon Lighting, that came on the 15th of April, that was up around 60% on its first day of trade. Then we've got Japara Health, which came on the 17th of April, that was up around 35% on the first day of trade. And this week, of course, we also had Genworth coming on, and that was up about 13%. So Spotless does look to be underperforming some of those other IPOs we've seen recently, so probably a little underwhelming in our view, and we're hoping or expecting it to pick up a little over the next few days.
Speaking of underwhelming, Regis Resources, what's going on?
It certainly is. It's come out with a very disappointing update today on their production and cost guidance for financial year 15. If we have a look at that company, recently they were significantly affected by a flood event at their Gardenwell and Rosemont operations earlier in the year. As a result, we did see their production in that March quarter report. It was down around 11% on the quarter and down around 14% on the year. But that was fairly in line with what we were expecting as a result of that flood event. We were waiting to hear out from the company more around their production and cost guidance, and that has come out today, but it has been very disappointing. Having a look at those numbers, firstly, their production guidance for financial year 15, they've indicated between 305 to 355,000 tonnes. Our forecast is at around 386,000 tonnes, so it is significantly lower than what we were forecasting. And secondly, looking at their cost guidance for financial year 15, they have provided guidance of around $835 to $915 an ounce. Our forecast was at around $671 an ounce, so again, significantly higher than what we were forecasting. It has missed our expectations, and I know there are a few analysts out there recently who have upgraded this stock to a buy, so I think there probably is a lot of disappointment out there today around this stock, and a reason why it is trading lower by about 20%.
And so, I mean, your own view on the outlook for Regis?
Our view on the outlook, we do remain very cautious. We know they have recently appointed a new Chief Operating Officer to assist in this recovery plan, so they are taking a couple of positive steps towards that recovery, but really we do see a lot of risks involved in that production, and particularly their costs. We do think there is the risk that costs may come in even higher due to unanticipated difficulties during that second stage of the recovery plan. We do think at some point they will move back to full capacity again, but I certainly think in the short to medium term there are a lot of risks there, and we do remain cautious. The stock is down around 33% since that flood in February this year, and down around 65% since its peak in October 2012, so it is trading at very low levels. It looks fairly cheap, but very cautious on the outlook.
And look, just finally, your thoughts on the final session of the week so far?
Well, today we are performing very strongly, James, and that was a result of some higher leads we received from the US overnight. We are being led higher by the property trust sector, as well as the financials, and as well some of those defensive areas, so utilities, staples and telecoms, which have in fact been the best performers on our market this week. Quite surprisingly though, the materials sector is trading lower today. We did see quite some higher commodity prices coming through overnight, so it is a little bit surprising that the materials sector is underperforming today, but really that's a result of Regis Resources dragging down on that sector. And of course the energy sector is trading lower as well, driven by Woodside after that Leviathan deal fell over. Treasury Wine Estates has been one we've been keeping an eye on. That is performing well today. It's up about 4.9% over around some private equity interest in the company. And Telstra is also doing well again today after investors are jumping back into some of those yield stocks. So it is a positive day and hoping to finish in the green.